And here we are, SMF. We just had Alcoa. We're kicking off these earnings on 4/11/2011. As we're busy here looking at it, we're going to dissect as what the numbers mean. One of the things that people need to know that in this particular name, Alcoa, is it trades differently, people invest in it differently, and it's not a high beta stock. And different sectors have different ways of trading, and the interpretation of the earnings is that over the last period of several quarters in a row, Alcoa has managed to do okay. They beat by a penny, okay? Their revenues are 21.9% year over year to 5.96 million. Now, here's where the trouble was, and it was only slightly, that these revenues here were light. The improvement over fourth quarter 2010 result was driven by higher realized prices for aluminum, and they are, because aluminum is going throughout the roof. It's also another forward-looking, it's a lagging, but it's forward-looking as to your inflationary cost. And there's going to be a point where they can't pass it on anymore. And the headcount reduction worldwide and the weaker dollar has done them well. They reaffirmed the company's projection that global aluminum demand would grow 12% in 2011 right here. Now, let's take a look at that. On top of the 13% growth rate in 2010, you can already see where higher cost is really the culprit for them doing business, and a lot of these companies are going to have similar reporting sessions in the quarter. We're in the ninth quarter of the February into February, March 2009 lows, when earnings troughs were down at the very bottom, and they walked the estimates all the way down right after 2008 financial crisis. That's one of the old tricks. It's one of the oldest gimmicks in the book, is the numbers start to come down so that when we're into these quarterly earnings, they can meet or beat the lower expected number. The thing about this earnings season right here, it's going to be a stock picker's market for the retail environment. That's a retailer, trader, retail investor. Where stockmarketfunding.com's position is quite different than what we do. So nonetheless, we do want to make it very clear and precise that the bulls on Wall Street in this case is going to make a case that these margins with the higher cost and a little bit of offset with Japan is maintainable. So therefore, Alcoa trades sideways on the low end would be 13.5 and about up to 1990 on the high end for this period of time. So part of what is going on is that they have beat quarter over quarter over quarter, and the revenue is light because of the energy costs and how they run their business. That's the bottom line on Alcoa. Beat by 1 cent. They did halt to stock. Forecast is 12. Remember, 2010 was 13% growth rate in 2010. We were early at that period of time. Throughout the 2010 calendar year, we were quite, the earnings trough was quite different, and the demand was quite different because of what was coming out of the Pacific Rim, Asian communities around the world, that is, Chinese, all of them for that matter. And that when the big money does look at it, having accounted for it, that they have accounted for it in their productivity on Alcoa. So Alcoa will be range bound and could go sideways in the SMF yearly mathematical formula for a period of time. I mean, you're going to go up, you're going to roll over, and you're going to go up, but it's just going to stay like that month after month, quarter after quarter. And there isn't going to be any real big moves to the upside nor to the downside. So it will be range bound for the rest of the calendar year of 2011. They will stand to benefit at certain periods toward the end of 2011 because the supply chain out of Japan, rebuilding that, well, I'm sure that Alcoa will be involved with it.